Good afternoon, everybody. This is Chris Wilson. I'm a senior fixed income client portfolio manager with Voya Investment Management, as well as head of the programming committee for CSA Society Atlanta. Want to welcome everybody for our online webinar this afternoon regarding legal investing in cannabis. A couple of household items. We do have some additional online events taking place that we want to make sure everybody is aware of. We have a data visualization and business analytics with Microsoft Power BI. That's an all-day course offered on September 28th. We have an economic outlook from the Federal Reserve Bank of Atlanta on October 6th from noon till 1 p.m. As well as another economic series is the economic tango being led by the virus. And this is led by Rajiv Darwin from Georgia State University on October 14th, again from 12 to 1 p.m. If you're pining for in-person opportunities, we invite you to join us for our confirmation dinner for newly awarded charter holders. That's going to be at the Buckhead Club for dinner on November 10th. With that, I'd like to welcome all of our participants as well as our panelists. And we're joined today by Mina Mishrikey. He is a CFA and senior partner at Merida Capital Holdings. We also have Howard Goodwin, MD and partner at Millennium Partners. And lastly, Brooke Hayes, a partner at Admiral Park Capital. As always, we remind you, please submit your questions via the Q&A feature within the Zoom controls. With that, let me hand it over to Mina.
Great, thanks for joining, everyone. I'm just going to make sure that everyone can see my screen, so just give me 1 second. Can everyone see this slide on the screen? Or Chris, maybe you could confirm.
Right now, I only see you.
Okay, just bear with me 1 second. Okay, how about now?
Yep.
There we go. Great.
Great. Well, again, my name is Mina Mishrikey. I run senior partner at Merida Capital Holdings. We're a private equity venture capital shop based in New York, and we've been around for a while and have about $500 million of assets under management over our funds, and we have actually a SPAC as well that's listed on the NASDAQ. So, you know, that's a bit about me. And just, you know, Chris, thanks for the introductions. I just want to make sure that I properly introduce my colleagues that have joined, who also are senior partners at their respective funds. We're all, you know, sort of on the private equity venture capital side. But Dr. Howard Goodwin is actually, he's at Intrinsic Capital Partners, and that's a fund, you know, based in Philadelphia. And Brooke Hayes is a senior member of Emerald Park Capital, which is based in New York and Philadelphia. So lucky to have them on with me, and thanks everyone again for joining. We'll do, you know, I prepared some slides on just, you know, high level on the market and the opportunity. So this is meant to be sort of an introduction to investing in this industry, in this space, and then after about 10 or 15 minutes, we'll transition into sort of a roundtable discussion Q&A with my colleagues on the phone. And I guess if anyone has any questions, feel free to, I guess, put them in the chat, or at the end, we'll leave some time for Q&A where we'll be able to have people speak directly into the Zoom. So this is sort of a snapshot of where the U.S. is today with cannabis legalization. Still federally illegal, but we have legalization at a state level in various forms all across the country. You'll see on the map on this page, you'll see that these green states are states that have both adult use and or medical programs. Adult use meaning if you're over the age of 21, just like buying alcohol or liquor, you can go into a dispensary and purchase product. In some of these blue and light blue states, there are more restrictions. They're medical only markets. You'll need the proper credentials as a patient to have access to product in those states, as an example. And so what happens often is states, as they legalize, they will go from blue to green eventually, and that trend has continued over the last decade or so. There are some federal legislative initiatives worth highlighting. There is a big movement, of course, to legalize the cannabis federally. Most recently, Chuck Schumer introduced a bill called the Cannabis Administration and Opportunity Act, which is focused on rescheduling cannabis and expunging prior records and funding equity programs and so on and so forth. That's working its way through the sausage making machine that is Washington, D.C., likely to not make much progress in terms of passing from a congressional standpoint, and we can talk about that a little bit later. There are some other initiatives that are listed on this page, most notably the Safe Banking Act, which would basically allow traditional banks to service the industry and provide some tax relief to the industry. So this is just very high level. The next page, we talk a little bit about how we got here. This may be hard to read, but this is a timeline on the left that shows the evolution from a state-by-state basis. Started in 1996 with California with a Proposition 215, which really created a unregulated state and industry, a gray area, so to speak, for a long time until 20 years later, when the voters passed Proposition 64, and it's created sort of the modern California industry, which is by far the biggest and probably most competitive industry in the space. The modern era really of this cannabis movement started in Colorado. You'll note below in the green, Colorado in 2012 and Washington thereafter passed adult use state regulations, and basically the voters spoke and started this new era of adult use states coming online. And what you've seen here is an acceleration of more and more states that are really seeing the opportunity, whether it's helping their constituents, getting medicine to their constituents, or really obviously the elephant in the room is the tax dollars that and a new revenue base that a lot of these states can see. And most recently, I don't know, there's probably a lot of local Georgians on the phone. Georgia passed legislatively, actually. Some of these states passed legislatively, meaning the government, the state governments pass the allowance of cannabis in a particular state, or it's a proposition driven by voters. In Georgia, it was actually a legislative initiative, and licenses were actually just awarded in Georgia. It'll probably take a year for those operators to get up and running. And you'll see medical sales in Georgia mid to late 2022, if I were to guess. And then just, looking at some of the states that are, states that are potentially going to institute legalization schemes, whether medical or adult use, in the near future. Big ones are, I would put Georgia in as a big one. I would put Texas in as a big one. Texas just passed a medical program that's pretty restrictive, but progress there. And then, New York just passed adult use. That's a huge market that's going to be unlocked. They've had a medical program for some time. Will take some time for that program to get up and running as the state officials work out regulations. New Jersey is coming online from an adult use standpoint. So when thinking about investing in this space, there's there's a lot that's happened, but there's a lot that's still ahead in terms of states legalizing and eventually federal movement, which will likely allow states to govern and control their states as they see fit. But we'll talk about that a little bit later. Just to frame, just give some perspective on how big cannabis is today. You know, beer, wine and spirits, cigarettes, wine. You see where it kind of fits. This is a lot of that is illegal sales, which is a big theme in terms of the potential growth in the industry. The legal sales of cannabis today are a very small portion of total sales. And so while it is a high growth industry, you know, as an investor, one of the you know, things that make us feel very confident in the potential growth rates of the industry is really this, what we call cannibalization of the illegal markets. And that's happening now, and it will continue to happen over time. And eventually, you know, history repeats itself. You know, bootleggers were around for quite a long time after Prohibition ended in 1933. Eventually, you know, the vast majority of sales go towards the legal market. This will take time, but it is definitely a tailwind for the industry. And when you're thinking about investing in the industry, it's very important to consider how this trend plays out. The graph on the right shows growth rates that are projected by a company called New Frontier Data, which is, full disclosure, a portfolio company of ours, sort of a data repository. It does not reflect the potential tailwinds that may be associated with federal legalization. You know, this next page, it's important to think about what we call normalization in the industry. You have, it's a very strange situation where you have this product that is federally illegal that actually serves in multiple capacities, whether it is a vice, you know, to take the edge off at the end of the day, or it's medicine for patients, or whether it's being used in the pharma context, or whether it is being used in an industrial context, which, you know, I'll touch on a little bit later as a huge opportunity. As more and more states adopt these programs, what happens is cannabis gets further destigmatized. It accelerates patient count and consumer acceptance. You know, people are much more comfortable with the concept of cannabis than they were five years ago, and so the adoption, you know, create new revenues, it creates new jobs, pushes more states to follow suit, as I touched on earlier, and eventually federal action will open up some of the capital market constraints that are upon us in the industry today, which we'll touch on a little bit later. And you'll see a maturation cycle in the industry that you know, mirrors other industries, but we're really at the early innings of this cycle. One telling chart that I thought was worth sharing was that, you know, Illinois legalized adult use cannabis sales last year. In a very short period of time, there are more revenues from the cannabis adult use sales than there are in alcohol sales in the state. And some of that has to do with the fact that actually Illinois has some of the highest tax rates in the country in terms of taxing cannabis, and you know, alcohol's different tax regime, different way that it's taxed. But when you think about the sheer volume of alcohol sales in Illinois and the sheer volume of cannabis sales in Illinois, alcohol sales volumes and dollars far exceed cannabis sales dollars and volumes. And so this is a very telling sign of, you know, really an industry that, you know, has a lot of headwinds in terms of being federally illegal, but consumers are adopting it in an accelerating fashion. And, you know, when we talk about legacy consumers migrating from the legal markets, or from the illegal markets into the legal markets, you know, one of the reasons we're seeing that is there's wider choice in the legal markets. That was not always the case. The illegal markets are dominated by flower only. In the legal markets, you have beverages, you have edibles, you have just a whole host of choices that you may not have in the illegal markets. You have higher quality standards in the legal markets. Everything is lab tested and highly regulated. And increasingly, you have more accessibility. You have delivery agents that are increasingly e-commerce becoming an increasing theme in the industry that's really just getting going in the industry. And so, that all these factors are driving this acceleration from the illegal markets into the legal markets. One of the reasons that consumers will stay in the illegal markets is it's going to be more expensive to buy legal product. That's just by virtue of the fact that it's regulated, that it's safe, that it's lab tested, et cetera. That price differential will erode over time. Cannabis will become a commodity over time. There will be price pressure at the retail level over time, and maybe in some states more than others. But what will happen is that commoditization will be offset dramatically by this migration from the legal markets to the legal markets. I'm sorry, vice versa, from the illegal markets to the legal markets. So that's what I wanted to highlight on the right side of this page. Just a snapshot of where the market is today from a state basis. California is by far the biggest market. There is, we forecast, or New Frontier forecasts on the right side, a shift to the markets that will be, what the market share will look like over the next 5 years or so. New York and New Jersey are big movers in terms of gaining market share over the next 5 years. And some of the more mature markets like California and Colorado, we would expect they would lose market share on a relative basis. But when investing in the space, it's really important to think about which states a company is operating in. Just a quick glimpse at the medical markets. I know that Merida, we've been very focused on investing in the medical markets. What happens when adult use markets come in, when you have like a Colorado or an Illinois, what happens very quickly is if you've migrated from a medical market to an adult use market, the adult use market is much bigger. There's several reasons for that, but the most obvious one is you have a lot of many more customers that can access the product. They don't need a doctor's note and a medical card, and they don't need a condition, and so oftentimes what you'll see is these adult use markets are 3 to 4 times bigger than the legacy medical markets. But most of these states will start with a medical program, develop that market, and transition into a medical market. We love investing in these medical markets. I'm pretty sure some of my other colleagues also share the same view. There's many reasons for that. Depending on the state, and obviously as an investor in the space, and on the institutional side are experts in terms of the regulations in each of these states. But these medical states tend to be much more restricted in terms of license count. So there's less competition, but more to the point, they have adult use upside. And really, we're big investors in the medicalization of this industry. Research is just developing, is really just getting going in the industry. There's a lot of pharma opportunities. Big pharma has clinical trials in this space. There's a lot of non-big pharma, private type institutions that are working through FDA trials, and really there's not a lot of data in terms of the efficacy of cannabis. I mean, the most clear data we have is actually with regards to a Dravet syndrome, which is a condition for children that have it's a terrible condition. They have hundreds of seizures a day, and just by virtue of using CBD can eliminate or minimize significantly those seizures. It's really the most direct connection and the most obvious efficacious relief that the plant can provide. There's a company out of England called GW Pharma that actually took cannabis through FDA trials, got FDA approval, and actually sell a drug called Epidiolex to kids that suffer from these syndromes. And that's going to be something that will repeat itself in the near future for other conditions. May not be as dramatic of a efficacious result as this example, but a lot of folks are focused on pain in the oncology sector, and so we see the long-term direction that this is going, and that's a big reason why we love investing in these medical markets. Another, just a couple of reasons I'll mention on the medical side of things is a lot of these markets for consumers have tax advantage pricing for medical consumers, and so that will some states, they when they go from medical to adult use, and I'm thinking about Oregon and California, the medical program basically goes away. But in a lot of states, they live side by side with each other. And in some of these East Coast and Rust Belt states where they have more mature medical programs, you have patients staying in the medical program because they have advantageous pricing, because the regulators realize that this is medicine. It's an over-the-counter methodology of getting them that medicine. And so that's another reason why we love some of these medical markets. And then the third thing I'll say is insurance reimbursement will enter into this space at some point. We're already starting to see it in New Jersey, New Hampshire, and New Mexico. We're seeing state courts ruling in favor of compensation for medical marijuana use. And when you look at the trends of opioid reduction in some of these states where cannabis has been legalized, we feel very strongly that insurance companies will see the cost savings and the opportunity and start for certain form factors, and depending on the state, to introduce insurance reimbursement schemes. That might be a long time down the road, but it's coming, and another reason why we love the medical opportunity. And I'll just touch on consumer preferences briefly. This is more on the consumer side, but flower and pre-rolls are the dominant form factor that people use. And then there's a whole host of other categories that really don't move around a whole lot. I mean, you'll see some changes on the fringes with regards to beverages are becoming a bigger theme in the industry. Edibles are becoming a bigger theme in the industry. But really, people just love flower, and that has dominated, and one of the reasons why we actually are pretty heavy investors in that space. On the next page, just a snapshot of capital markets, really underdeveloped, but deal flow is increasing. Federal treatment is really leaving a lot of institutions on the sidelines. It's but one thing that you can read from this page is, well, a couple of things you can read. Number one is consolidation is a big theme in an industry that's very young. There's a lot of public companies that are looking to bring on more and more states, bring on brands, and be the big fish when federal legalization comes, and traditional CPG companies and beer and alcohol and big pharma come into the space. And so that's accelerating a lot of this consolidation. The other thing you'll see is that the capital rate dollars into the industry are starting to increase. It's been a bit up and down, but really when you look at the scale of money raised relative to the industry, or more to the point, if you look at the number of the amount of sales in the industry relative to the market cap of the biggest public entities, it becomes evident that institutional capital is really not playing in the space. A lot of people are on the sidelines until federal legalization happens, and so it's a real opportunity for investors, retail investors, family offices, and institutions to get ahead of that trend. Equity is the dominant form of capital in the space. And this page lists a bunch of the big public, what we call multi-state operators. For the biggest and the best, they are starting to be able to access the debt market. Sale leasebacks are a big theme in the industry, but without traditional banking funds flowing into the industry, I guess I should point out that the big banks are not banking the industry. There's certainly, even local banks are not really lending into the industry. Federal illegality has precluded them from doing so. And so that's a big reason why equity is the dominant form of investment in this space. And that's going to change. That we predict that's going to change. We'll talk a little bit more about debt here in the near future. But it really is, as an investor, and from my seat and Brooke's seat and Howdy's seat, it really is an investor's market. I use the analog of, my brother-in-law is a VC at a very successful Silicon Valley, technology-focused venture capital firm. And, in that market, it's, deal comes across your plate, you have a day or two to respond, you're putting your best foot forward, you hope you win the deal if you like the deal, you're hoping that, the Andreessen Horowitzes and the Sequoias of the world don't take the deal from you. It's very much a founder's market. In cannabis, it's the complete opposite. There's not enough capital flowing into the space. And so as an equity investor, you really call the shots and can really drive terms and drive value and de-risk investments. Just a few ways of how to invest in this space. And I realize that I'm probably running way over time here. So I'll cut the rest of this short. One thing to think about is there are companies that touch the plant, meaning cultivation, processing, retailers, and then there are companies that do not touch the plant, meaning companies that are creating lab equipment or are hardware platforms or data platforms, software platforms. And there's a big difference between the two in terms of how they are treated from, certainly a federal, legality basis, but also from access to capital and banking basis, also from a tax perspective. And it's really important to distinguish between the two. There's a lot of private companies that raise money in this space. There's a lot of public companies that trade in this space. There's a strange dynamic in the industry where you have a lot of U.S. operators that have listed on the Canadian exchanges because they cannot list on the U.S. exchanges, and they can't list on U.S. exchanges because it's federally illegal. So those exchanges like the NASDAQ and NYC are not comfortable with listing those names, and so they're not really accessible from a trading perspective. And so you have this weird dynamic where the U.S. operators are listed in Canada on the Canadian exchanges. They're printing money for the most part. They're making just very impressive quarterly results. They're exceeding expectations, and they're trading at oftentimes lower multiples than their Canadian counterparts. The Canadian markets, which I won't speak about too much, but the Canadian markets, a lot of those operators are losing significant amounts of money. They're not great operators relative to their U.S. counterparts, but by virtue of being able to list on the U.S. exchanges because they're federally legal and they're operating in Canada. In Canada, it's federally legal. They can list on the NASDAQ and the NYSE, and therefore they're accessible. Therefore, they have higher volumes. Therefore, they have relatively higher multiples. And so it's a very strange dynamic that's created a lot of volatility. And I think we all share in the belief that once there's some federal relief, a lot of these U.S. operators will be the biggest beneficiaries. A couple other ways to invest in the space: private equity and venture capital. Obviously, we all on this call represent that space. There are a whole host of cannabis ETFs. You'll see from this chart on the right that the cannabis ETFs have actually been more volatile. And a lot of them are, in my opinion, poorly constructed and maybe not as efficient as creating a diversified basket of some of the underlying names. And then there's a lot of SPACs in the space. I mentioned that Merida has a SPAC, and I won't talk about it too much, but that's those are other opportunities that are listed on the public exchanges. And then there's a whole host of debt opportunities, which we'll talk about with my colleagues. Last thing I'll mention is, this is a high growth. You probably can't read much of what's on this page, but this is an industry that's in its early stages, that has tech-like multiple growth rates, but trades at a significant discount to any other industry for some of the challenges that I've mentioned. So it presents really an opportunity. A lot of these stocks have actually increased significally into February of earlier this year, and have sold off significantly, quite a bit since that February turning point. A lot of that has to do with market participants being dissuaded by the federal movement on this topic, and a lot driven simply by the fact that the volumes are not there to support these stocks because they're not traded in the U.S. And so there are a lot of headwinds that will be lifted at some point, but I don't think any of us on this call are holding our breath for DC to make progress on the federal treatment of cannabis. And so we continue to just feel there's just so much long-term value. And actually, Merida as a fund, we're typically private investors. We are starting to make some direct public investments just by virtue of how nonsensical some of these stocks are trading and how much value there are in these stocks. And so, we're business builders, we're not hedge fund by any means, but the public markets provide an attractive opportunity given where these stocks are trading right now. So that's it. I'm going to stop sharing my screen and we'll pivot to this roundtable. Sorry for going over on that portion of the call, but I thank everyone for listening to me speak. So maybe we could start, Howdy and Brooke, and maybe Howard, you could go first. Maybe we could start with, you guys can more formally introduce yourself and your platforms, and maybe tell us a little bit about what attracted you to the cannabis space as an investor as you entered into the space, and the history of your fund and how you've gotten your fund to where it is. Maybe a little bit about focal areas around your fund. Just a broad introduction would be helpful, I think.
Sure. So yeah, my name's Howard Goodwin, and I've been investing in the life science space for about 20 years. We set up a growth equity firm to focus on cannabis, really with the idea of bringing not only investment acumen from our investment team. We've been investing both in private and public markets for a long while, but also the operating network that we have access to through our partners and advisors. And so really the gist of the strategy is investing in companies that are corollaries to the types of businesses that folks in our operating network have really grown and scaled over the course of their respective careers. We believe that execution risk is one of the primary risks in this space to date, and that happens to be our biggest asset. So the areas of focus for us are directly tied to that operating network. As far as just the attributes of the cannabis market that we were drawn to, first and foremost, what was the potential healthcare benefits, as we started to really dig in on the science and developed a better understanding for the endocannabinoid system and for the fact that, because of that, the chemicals in the plant affecting that part of the nervous system, translating to clinical effects across a number of disease categories. And the first area that we were quite impressed by was chronic pain, where the treatment spectrum in chronic pain is opioids on one side and aspirin on the other, and nothing in the middle. And in the data that we looked at in Israel and elsewhere, the efficacy was quite compelling. The idea of plant-derived medicine is not a new concept, and there are medicines all over the world that where you're extracting chemicals from plants and turning them into pills and patches and so forth. So that was initially what we were drawn to. Obviously this is a hyper growth space. There's a lot of inefficiency. Mina, as you mentioned, just that void of institutional capital translates to it being an investor's market, as you said. And then also, just at least in our mind, the misperception of regulatory risk. Although it is a Schedule I drug, particularly for the ancillary businesses that we tend to be more focused on, sort of the picks and shovels types of companies that are not necessarily touching the plant, but supporting and helping provide guardrails and safety and high quality for the industry. Those businesses are growing with the industry, and yet from a risk perspective, we think that the risk is really more around the execution, which is where we're focused. That's our sort of background. But Brooke, I'll kick it over to you.
Yeah, and actually maybe before you jump in, Brooke, just a quick follow up, Howdy, which is you mentioned pain. As a doctor, I'd be interested, or I think that the audience might be interested in maybe just touching very briefly on some of the other conditions that may be relevant as it relates to cannabis as a medical
Sure. Yeah, the other big one that we're focused on right now is the inflammatory category, and that's obviously quite broad, but just the anti-inflammatory characteristics of this of the plant really touch a number of disease categories. Dermatology is an example, where eczema and diseases where the immune system is kind of going haywire in a given patient. The cannabinoids can reverse that trend, and inflammation really covers a number of different disease categories, ranging from autoimmune to skin disorders, et cetera. So that's another big one. You had mentioned epilepsy. It's quite broad, and for our second fund, we will certainly be focusing more on the FDA track type companies that are looking to develop full-on pharmaceutical products.
Great. Brooke, sorry to interrupt.
Oh yeah, no problem. Again, Brooke Hayes. I'm with Emerald Park Capital. Emerald Park primarily focuses on providing debt capital to cannabis businesses in the U.S., mainly senior secured type deals. My interest or my involvement in the sector came from I had 20 plus years in investment banking and private equity. I'd been at a buyout shop for about 16 years, which we raised numerous funds and a lot of capital, and it just got so competitive. The average buyout multiples were in the double digits. People were borrowing 6x, leverage, and there's trillions of dollars of unspent capital. And these are for, in many instances, lower growth businesses. And having been a generalist, it became very much a specialist type investment thesis. And in 2016, I was sort of looking around for an area to really dig my teeth into, and stumbled upon cannabis actually through Howdy. So there's definitely a connection there. But I just looked at it and said, look, it's a massive market. At the time, they were projecting it was already $70-80 billion if you include illicit. Every demographic, at least medically, can benefit from it, and from an adult use, every demographic as well. You got people my parents' age down to the younger generation. A lot of confusion on the regulations, and a complete scarcity of capital. So to me, those things together just make for a perfect really arbitrage opportunity. And I'd been consulting in the sector in 2017, 2018. And one of my clients was trying to raise some debt capital, and I went to an investment banking friend to see if he could help us. Anyways, he and I started talking. We decided, hey, let's raise a debt fund, and so that's how Emerald Park started. We ended up making our first investment at the very end of 2019. We have about 10 portfolio companies, and we've sprinkled in a little bit of equity type investments as well.
That's great. Well, maybe we could stay on the debt theme, Brooke. Emerald Park, as you mentioned, takes a bifurcated approach, investing in both debt and equity, and I wonder if you could share a bit about the logic of that approach, and more broadly about the debt opportunity as it stands today in the industry, which, as I mentioned earlier, is pretty nascent relative to obviously equity.
Yeah, well, look, I mean, out of the gates, our goal was to be about 2/3 debt, 1/3 equity, and by equity, a lot of equity is like convertible debt that's really equity-like. So when I say debt, it's more senior secured debt. And out of the gates, we were surprised. We were able to lend to top tier MSOs like a Columbia Care or Jushi. There was just such a scarcity of capital that they were willing to borrow from us at mid-teens type current yields, plus warrant coverage, which we believe could double our return profile. And to date, as demonstrated on an unrealized basis, that it probably will. And that was very attractive. A lot of the companies back then weren't cash flow positive yet, so we were relying highly on sort of loan to value. But I think the average loan to value in our portfolio is about it's well over 2 to 1. Which is pretty good. And the average yield on our whole portfolio, which includes some equity, is about 11% current yield. Now, with that said, the markets have evolved. There's been more players coming in, bigger institutional type investors, maybe not institutions, big family offices, some other alternative type groups. And they have started to, the cost of capital for these businesses has dropped dramatically. And so we've gone more to the mid-tier and lower tier. We're still, we have a deal right now closing up in Massachusetts with about a 15% current yield and warrants, really attractive warrants. And what we think Massachusetts is a great market. But the cost of capital will continue to come down, but we believe our cost of capital will come down as well. We're in the process of getting back leverage on our fund, which will allow us to significantly reduce that cost of capital. But I know there are at least 2 BDCs with a focus on cannabis that are coming to market any day now, and they'll have a much cheaper cost of capital than we have. Obviously, the REITs have already been out there, the equipment leasing businesses. And they've been gobbling up a lot of the collateral. But fortunately, a lot of these businesses are cash flow positive now, and we're starting to lend on more traditional metrics, credit metrics.
Yeah, that's great. And it's interesting, you mentioned leverage. Leverage really is not a theme in the industry yet. And it sort of adds a level of safety to some of these investments. But,
yeah, and even when Safe Banking Act passes, I don't think the PNCs of the world are all of a sudden going to just start lending to cannabis businesses. Dodd-Frank created a multi-trillion-dollar, private credit market, specialty finance market. And, I think there'll always be opportunities there, but certainly, we have to be wary of that. I do believe that for our second fund, probably more important to be, pick one or the other. We will probably have 2 funds, an equity fund and a debt fund, just because certain investors just love that current yield and other investors want sort of the, the grand slam home run potential.
Makes sense. And just for the audience, I'm going to probably leave, I don't know, maybe 5 or 6 minutes at the end for questions. So I'll ask a few other questions, and if you want to tee up your questions, please feel free. Howdy, back to you. You talked a little bit about your focus on the, kind of healthcare life sciences space. Just looking at your portfolio and knowing what I know about you guys, you obviously have a lot of inroads in the technology aspects of the industry too. Maybe you could talk a minute or two about, why those focuses in particular. Maybe that's just a function of obviously your backgrounds as well. But also, what are some of the holes in the industry today that maybe present an investment opportunity in those subsectors?
Sure. Thanks, Mina. So, we tend to focus on pain points and bottlenecks within the industry. That's kind of one theme throughout our portfolio and our strategy. And then, as you said, the second piece of it is our backgrounds. We tend to be, or at least I was trained as a specialist in terms of my investment, career in healthcare specifically. And so, the crossover there with the operating network is key, in terms of de-risking execution. I think that the third piece is that these kind of picks and shovels type businesses that are supporting the supply chain, in a lot of cases, they had the investment attributes that we tend to really like: high return on invested capital, recurring revenue, scalable businesses, not necessarily limited to a given state. They could scale nationally, in many cases internationally, and then also barriers to entry. Obviously the multi-state operators that do have big brands, there is arguably a moat there. With many of the more sort of local producers who are essentially just producing a commodity. As you mentioned in the presentation, ultimately, pricing will continue to go down, and you really need the barriers to entry to kind of sustain the business, particularly on exit. So, and really to that point, we tend to, because another item that obviously folks focus on is, upon federal legalization, what's the market going to look like? We try to ask ourselves at the outset of looking at a given company, upon federal legalization, is this company likely to get acquired by a strategic or potentially displaced? And as we, kind of dug in on all the given subsectors, it really, and then did the overlay of the operating network, it led us to those life science and technology type companies. So examples, lab testing. It's a real bottleneck in the industry. There are not nearly enough lab companies relative to the number of producers that are out there. Lab testing happens to be a very high margin business, and as far as our operating network is concerned, it crosses over quite nicely. One of my colleagues, his last job was running a national lab business, and we've got folks in our network who've been able to plug into that investment. Another sort of problem or pain point. The breathalyzer company, Howden Labs, that we invested in, obviously both on a law enforcement level and from an employer perspective, when cannabis gets legalized in a given state, that poses a problem in terms of impairment for either people on the job in a safety sensitive industry, and at the roadside, just driving. And so that those are the types of companies that we're investing behind, that where we felt like we can add value.
Yeah, and I think, Brooke, you're also invested in this Howden Labs platform as well. I'm actually looking at it as an opportunity right now. Very interesting opportunity. Brooke, we have a question from the audience, so maybe I was thinking maybe you could take this. Have you seen an evolution in investor sentiment? The question goes on: we still have some clients who maintain exclusions to investments in companies who generate significant revenues from cannabis. What are the catalysts you see in changing investors' attitudes?
Yeah, well, look, I mean, unfortunately, it's probably not until there's meaningful, regulatory changes. Probably most importantly, from an investment perspective, it would be the Safe Banking Act. And it's just, there's still people out there that just worried that if they make too many investments in cannabis businesses, especially private ones, maybe, their bank will shut down their account or something like that. But, from my perspective, getting access, or we're trying to plant as many seeds in the ground as possible, because upon some of these regulatory changes, the avalanche of capital that's going to come into the space and the amount of liquidity that's going to come into space can only just dramatically increase valuations. It's just sort of a supply demand issue. But in terms of the specific sentiment, I mean, yeah, in 2017, when we were going out trying to raise money for different companies, we couldn't get a lot of people on the phone. And then 2018, it was a lot of educating people, maybe early 2018, and then everybody just started piling in. And it's a lot easier to have a conversation with people now. I think part of the problem with the public markets is everybody that was interested or willing to take the risk and get into cannabis, they've sort of gotten in, and we need to bring more investors into the fold to enhance liquidity.
Right. And Howdy, I'd be curious your views on the back of some of Brooke's comments on, just your view of the public versus the private market opportunity. I mean, I'm sure we share and the view that private markets provide a little bit more information asymmetry, but given where the public markets are, what are your views there?
Yeah, so we obviously, at least to date, have been exclusively focused on the private market opportunity. That said, we've invested in public equities for most of our respective careers on the team. So we're certainly tracking it closely. Part of the dynamic for us, considering the bias towards the ancillary type companies, and then also just when you look at liquidity in the space generally, we want to be able to invest in multiple different subsectors within the industry to have that diversification and to kind of line it up with where we think the most scalability and protectability is. So for now we're sticking with the privates, but we're certainly tracking the public opportunities quite closely. And to the degree that that's a lot of these companies that we're focused on the private side right now continue to scale and ultimately enter the public markets, I think at that point we'll be in a better position to probably set up a platform to invest in both. So it's really more a matter of just the areas of focus throughout the supply chain for us at the moment.
Got it. Last question I'll give to you, Brooke. What, in terms of, I spoke a little bit about brands, and one could say there's not a lot of brands in the space that people really know universally. But where do you see that trend going, and how do you approach investing in brands?
Yeah, well, definitely there's just too many brands out there, not enough dominant brands to really make a bet on from our perspective. And part of the reason we're focused on debt is because we'll be out before that really plays itself out. Now, we do look in certain states for example, Connected Cannabis is a business that we've supported out of California. They're probably the top premium brand and consistently sell for a premium to every other legal cannabis in the sector, and there are some brands, especially at the retail level, being developed in certain of these limited license states, and a lot of it's done by just great customer service, great locations, lots of parking and things like that, but they really haven't developed. But I mean, ultimately, we believe it'll be like the beer market. The beer market in around 2000, Anheuser-Busch was, or AB was about 8 or 9% of the market. And through consolidation, it's now 29% of the global beer market. And the top 5 or 6, back in 2000 were about 20% and now about 65%. And so that was pretty much primarily done through consolidation. And so, we are happy to invest equity in some of these, brands that we think will be acquired by the consolidators. And frankly, the longer this federal legalization takes, the more powerful and strong the big public MSOs can get, just because they have better access to capital than almost anybody else.
Got it. Well, we only have a few minutes left for questions. I just noted some questions in the Q&A. So either of you feel free to jump in. One question: do any of you invest pre-revenue? If not, how small in terms of revenues do you consider? And I'll just speak for Merida. We're by and large a growth equity platform, but we do invest in pre-revenue companies from time to time. So yeah, howdy, Brooke.
Sure. Yeah, so we've invested in 2 to date, and we consider ourselves to be a growth equity firm as well. So the Hound Labs investment, even though it was pre-revenue when we made the investment, we looked at it sort of analogous to a biotech stock that's already gotten through FDA. At which point you see the market cap explode, and in Hound's case, it really hadn't yet. And with the pent-up demand and the market opportunity that's right in front of that company, along with the barriers to entry, which we think give them a significant head start, we were comfortable with that, particularly after we got more comfortable with the operator or the COO's ability to really scale the business. And then the other investment that we've made is in a company called Next Evo. It's a wellness company, hemp-derived products, and what gave us the confidence to do that is we essentially brought in the team who used to run McNeil at Johnson & Johnson. So the chairman of our company ran McNeil, the head of R&D ran R&D at McNeil. And so in terms of the way they're building out the suite of products, which will be launching in the next couple months, we had confidence that they were going to do it the right way. And we're comfortable with that investment. But by and large, we're focused primarily on companies that are already generating revenue, and in most cases, or in many cases, are already profitable.
Okay, well, we only have a minute left. I think we're going to send around the presentation as well as our respective contact informations. One last question, maybe we could squeeze in for you, Brooke. Could you maybe talk a little bit about the timeline for getting meaningful, data or research just getting started in the space? I don't know if you have a view there, or Howdy.
Yeah, I mean, I can start, and Howdy, you can definitely chime in. But because it's federally illegal, there's really historically only been one university or down in Mississippi, I think, that was allowed to do research in the area. I mean, there's in Pennsylvania, for example, where we are, there's they issued these clinical research organization licenses where hospitals would team up with entrepreneurs and they can try and do some research and develop products. But largely in the US, there hasn't been enough or nearly enough research. I mean, there are other countries, specifically I would think of Israel, that has done a really strong job evaluating and doing research in the sector. I know in Israel, for example, PTSD is a big deal because everybody has to serve in the military, and figuring out what strains of cannabis can potentially help alleviate that ailment. But Howdy, do you want to chime in?
No, I think that's great, Brooke. I got nothing to add.
Okay, right. Great. Well, listen, I know, Howdy, you have to go and I have to go, but thanks to everyone for joining us. And I'll hand it back over to my CFA colleagues, but really appreciate everyone's time.
Yeah, let me echo those sentiments. Mina, Howard, Brooke, thank you very much for taking some time today. We also appreciate everybody for making time for this presentation. Look for a follow-up survey, including information on the replay, as well as a copy of the presentation. As always, we appreciate your feedback to ensure we're delivering top quality programs, much like today. Thanks, everybody. Have a great day.
Thanks, guys. Appreciate it. Thanks, Mina. Bye.
Yeah, thank you, guys.
Bye.